All right, guys, welcome back to another video. Plenty of top signals in the markets, looking at Bitcoin, total cryptocurrency market caps, and we have some of the largest volume in history now showing up as we hit new all-time highs on the total cryptocurrency market cap, now up over 300% since the low. So heaps to get through today. We got a massive agenda for you guys lined up, looking at all of the markets. It's your home of macro cycle analysis. We're covering Bitcoin, cryptos, the stock markets, you guessed it, and the real estate cycle as well. Make sure you hit that like and subscribe if you're new here. I don't want you to miss out on each of the day's analysis. We continue to update each particular day. And you only have to take a quick look at the comment section to see that people are really starting to click on here and understand how these cycles are working, and ideally making a few profits as well. Okay, so top signals, but we're still in a bull market. Of course, this is all my own analysis and I'm just sharing it with you guys. You're welcome to have your own opinions of the markets. So number one, we've got the traditional markets, S&P 500. Then I want to show you some of the data for the best 6 months ahead. Market sentiment, Bitcoin search volume, changing in the short term here. So keep that in mind. I'll show that in a sec. Fear and greed, massive, massive for this cycle. Flows, the 7 to 10 day rule, looking for peaks, not to get too ahead of ourselves. New all-time highs as we just had a look at. The true altcoin season coming up. And then again, highest volume in history. So let's just start with some of the major stuff, the traditional finance, because we still need to see more of that money coming into the system in order for Bitcoin cryptos to go up, because essentially they're the risky assets. And at least in my opinion, basically my thesis that I've been holding on the channel here for years is that you need to see more money come in, more risk appetite in order for Bitcoin and cryptos to go up. So in terms of S&P 500, let's have a look here. This is something nice for the Trumpies, the Trump supporters, Trump elections before and after. Now there is of course only one data point here, but in terms of the S&P, the cycle here in trading days shows an uptrend here into the inauguration, then a bit of a sideways period, potentially some corrections, and then we go again before we get another pause, and what typically follows is a bit of a downtrend. So this is only one data point, but it's enough for Seth to increase his targets here. So Seth is a friend of the channel, a lot of fantastic data that we use here, and I've been following him for years. Fantastic stuff when it comes to traditional markets, and basically it's been working in the face of like 95% of other analysts who were calling for recession. So here is a longer term time frame with more data points going back to 1932. So looking at, what's that, 88 years. Now what this shows is where the election comes in and then the inauguration, what happens to the S&P 500. So looking at the S&P 500 fading around just after the inauguration for roughly 100 trading days, so days around US election, and then it starts to get going again. So we have pretty good time ahead after that point, but for this next period, at least in the short term here, we've just passed the election, so a week and a few days, we've got good upside, but there generally seems to be some sort of minor correction, and it seems like the markets are building up for that. We've obviously seen big moves from the S&P 500, we've seen big moves from crypto, and even if it just pauses, that's not a bad thing. That would be like basically the bulls are hoping for bigger prices, they sort of get a little bit scared. The bears, they're hoping to get in again, they want to basically buy up some dip, and it doesn't give either party, either view of the market, that entry point that they're all waiting for. So it's kind of like a ideal scenario to get that next big pump up. The bears miss out, the bulls might get cold feet, but then the thing gets going again and we push to higher prices. So with that in mind, as we've covered off here, the seasonality, looking towards quarter one, a little bit of a warning in there, but overall, you got the good 6 months ahead. All that means is you could see some pullbacks. But every single time, if you've been following here on the channel for years, you know that each time these pullbacks come in, there is a group of people who just expect that it's over. And they just say, this is it. That's the end. We've hit 100K. See you in the next 4 years. They did that in March when Bitcoin hit 74K and they said, it's all over. We'll see you later. It wasn't. We had our 8 months of consolidation. We looked here on the channel for 4 to 6 months. It happened. It went a little longer, but it was on the way up from that point. And basically, they kind of leave at these times. So it's really just to prepare us for any of those sort of corrections. And what this is showing is the next 6 months here, you have really good returns over that period. So you can see if you buy in October, sell in April, what the returns are like. And there is obviously a lot of data points here because it's doing it for every single year. It shows there is 60 times that it's up and 20 or 19 times that it's down. Percentage of times is 76. So 76% of the time it's up. If you just buy and then sell at those 6 month periods, it's a pretty good rate. So this is the inverse to the sell in May and go away. This is like the, I think they call it the Halloween effect. Basically, you got that October and then you sell out in the end of April. Sell in May, go away. So 24% of the time it's down. So 3 out of 4 times you're going to get a positive result. The average up was about 11% over the 6 months, November through to April, and then the average down was about 6%. So this is all building to that, I guess, scenario for Bitcoin and cryptos to continue to show strength, but there will be times where it either pauses, as I'll get to in a moment, or you see corrections. And if it goes a bit too far, you're going to see severe corrections like we've seen before. It's by severe, to give you a very definitive example here, something like 20 to 40%. Anything under 20%, not really severe. You see 17% a lot, 15%, 10s. That happens quite often. But yeah, severe is basically where it might stall the market for an extended period of time. The median is 10% up, 4% down, and the maximum pretty decent there, around 28%. Number of times that it went greater than 15%. This is for the S&P, okay? 16 times out of that 60. So again, what's my quick maths here? About 1 out of 4 times it does more than 15% in that 6 month period. Now this is part of the TIA indicator suite. We're looking at the Dow Jones curve. Basically gives us the roadmap. This comes out every year and we're able to see what the market is most likely to do using specific cycles. Now, I just want to draw your attention to November. You can see the orange line, the green line, and the blue line. The blue line is what we're currently in. This is the market movement for the Dow Jones. And in each of these occasions, there is some sort of minor peak here around mid-November. So maybe sometime next week. And then the pullback comes into December and then it gets going again. So if we line up for something like that, don't be worried if you start to see a pullback. I've seen lots of headlines about why the market should come down, but it seems like that fear is fading from the market for good reason, because like we've seen, there's typically more upside in the 6 months, more upside throughout into 2025. And as I showed you in yesterday's video, 2025 typically is quite a good year, or years ending in 5. So over to the stock market, what it's done over the last day, basically nothing. I don't need to waste your time there. Still sitting at 6,000. NASDAQ still sitting at 21,000. The Dow Jones still sitting above 44,000. The main thing to look at here are your support and resistance levels. The swings are still intact, uptrends, and yeah, still holding about 43,500 points. The volatility index continues to drop, which is exactly what we see in bull markets. This is our bull market zone that I coined a couple of years ago in 2022. Quick history here. You can see it on the channel. Many people were calling for a stock market collapse there as it dropped to 17, thinking that the VIX was going to spike as soon as it did that. It didn't, and we got a nice sustained bull market from that point in time. That's what we're currently in. This to me is like a health checkup of the market, or if you're into cars, I guess you're putting your car through a service, you're checking things off. Is it all running smoothly? And yes, it's all running smoothly. Now it's time to ride, if I could get that out, right? We're time to ride Bitcoin cryptocurrencies. Okay, so in terms of the Google trends here, market search volume, Bitcoin search volume, we are still pushing to higher search volume. Yesterday it was 71, now it's 74. But what I want to look at is just the last 7 days, because just in the short term, which would possibly lead to short-term corrections, not long-term corrections, that takes time. You can see that the search volume has dropped off here. So today, 14th at 2 a.m., about nearly 10 hours ago, is lower than the 12th, which means less people are searching for Bitcoin. And you can see that momentum slowing. Even though it went to a new high price, we're at 93,500 for BTC. It's dropped now to 90,000. You can just see that momentum in that the buying has slowed compared to where it was as it broke out. In terms of the lows here, you're at 35 and it's matching the previous lows. So you've got a lower highs forming. This might continue to drop off over the next several hours and maybe a couple of days. If that's the case, well, then you could possibly expect that you've got a bit of a top forming. Short-term top, which is fine. We've looked at everything. It's all good. Okay, next up is, well, the real estate cycle. All of us should know this by now. Winter's curse. Things are still up. 2025, 2026. Nothing has changed there. So huge liquidations. What I would say about this is it makes for a healthy market. What we see often is that when you get these sort of low periods, not much is going on, it's either sort of boring market action that you can see here with the dates. See August and September, the market was sort of trending up, pulling back, higher lows. So it was building for what we're seeing right now. And we see a lot of volume. We've got like all-time high volume in the total cryptocurrency market cap. So basically the highest volume we have seen throughout all of the markets. But this is building, I think, for a healthy move. There's going to be corrections, don't worry about that. But in terms of the healthy move, it's because you're seeing a lot of the leverage getting flushed out, long, short, over and over again. And I dare say, whenever we get some sort of short flush out in the future, this would be probably one of the biggest short flush outs that we'll see in history because of how much money is in the markets. So that's on the way to the upside. You'd see these shorts getting flushed out. And the same thing to the north side. You'd see the biggest longs getting liquidated whenever we see any sort of correction for BTC. The last major long liquidation was at the low. So the 5th of August lows. I'll show you on the chart in a sec. So all, I guess, good things for the medium to longer term happening. Short term seems like there is just a little bit of steam running out. Doesn't mean we can't go a little bit higher, but typically even just a pause is absolutely okay in the market. Okay, so let's have a look at ETF flows and the 7 to 10 day rule here. ETF flows are dropping off as well. So you had that big peak here on the 7th and then on the 11th, 12.6K of ETF flows, and now we see 9.4. So basically less buying coming in as well. In terms of seasonality for BTC, well, we've experienced that. I showed you this chart back here at the lows around October, and it said this is probably one of the best times to be getting in terms of seasonality for BTC. And then if you layer that with where you are in your own 4-year cycle or in terms of the strength and the weakness on the chart, it was only a matter of time until we were going to see the seasonality play out. That big upside move. That was around low mid 50s to 60Ks in October, and now we're in November and the thing is just basically exploded. Fear and greed index is also at a fresh high, almost a new all-time high for this cycle. So 12 months, in March, within the last 12 months, we saw it at 90. Now, what I want to add to this, so my own analysis here, is that the fear and greed index, you probably guessed it, can remain elevated for sustained periods of time. And on the channel, I've gone back and counted these for you. We've looked at timeframes that the fear and greed can remain in these levels. The importance of this that I guess most will not pay attention to, and we see it time and time again, is that they think that the fear and greed can go on forever. This is essentially a barometer of, say, like an accelerator in your car. You might only have so much speed or so much gas that you can go before the thing starts to die and you have to refill the gas. Same thing for exercising. I prefer that analogy. You know, there's only so much energy you have before you need to take a break, reset, and do another set, okay? Or you just are over. The workout's off. And what happens every single time is that you have roughly about this sort of 2 to 4 month period where if it gets going, that's it. That's your entire set. And you're doing 2 to 4 months in this greed or extreme greed, and then it needs to reset. So we saw that in the previous cycle. This was a really, really big move in November, and it lasted until January. It had to reset on this big correction. That was a 31% correction. freaked a lot of people out. Now, there's a lot of lessons to this overall when it comes to buying and selling and how to hold your position in the market. But the main thing I want to focus on here, and I have a tendency to go off track, is just looking at the time frames for the fear and greed index. So here we are, early November, early January. That gives you, what, 2 months of extreme greed before it had to reset and then work its way higher again. Then you had about 2 weeks, 2 to 3 weeks in extreme greed again before it had to reset. And from that point, you can start to see that the energy of the market was over. And it was like you're coming towards the end of your 1 hour workout. You've been flogging it for the first 40 minutes. And that last 20 minutes, you were absolutely dying off. That's what happens in the markets as well. Even if you have computer programs telling you everything you need to know, it's still made up of humans, and humans are going to make that final decision. So keep that in mind for any sort of time we move into a greed or an extreme greed reading. Here we are moving up into it. If this is the case and we are able to hold here and we remain up here for, two months, it doesn't mean that we won't see any sort of correction. So just have a look at this last one as well. There were periods here where we're in extreme greed and the market was pausing. You can see there. So just looking at the pause, taking a breath here, 11 days. Again, it got up to that point. I'm just looking at areas where the price stopped and then started to go again. That was 21 days. You had small pullbacks here of 15 or so percent. And again, a smaller percentage there. But essentially, it was 21 days until it was able to break out of those highs. So that's 3 weeks that the market was still sitting in greed. It could just, in extreme greed. And then it got going again and made big gains from that point. So don't, get shaken out of your entire position. It's not a bad thing to take small profits if that's what you want to do. But yeah, you just don't want to be selling off at these times until you see more signs that the longer term trend, the larger trend here is starting to roll over. And that takes time. That can take weeks, if not months, for it to develop, like we looked at in yesterday's video. Speaking of which, make sure you subscribe to the channel, like the content as well. As I've talked about, we continue to build on each of the day's analysis. So short term, some topping signals are showing up, but longer term, there still looks like there is plenty of time to go. This is a post I did about 4 weeks ago, which means there's about 53 weeks left, give or take. We're not trying to get an exact point here, but just give or take to give us a roadmap to the end, which would take us out to about Q4 of 2025. Having said that, as I've talked about with these first few, we definitely want to pay attention to Q1 of 2025 for any sort of signs of slowing down. If you wanted to, move your money around at that time, you wanted to take a few profits to go and do something else with, that's an important time to watch the market because, we know having to hold out for 6 to 9 months until that next peak, if that top comes later, there might be some other things you want to do with that money, and it could force you to make some bad decisions in a time where the market might be trending down. We'll get to those periods should they show up in the charts. For the Aussies, a quick look here at our Swiftex dashboard. We're at $140,000. I like to bring this up. You guys can see around the world how much one Bitcoin is worth in different currencies. The top we got to was 145,000. Similar sort of analysis where it's going to be basically the same. Plenty of volume coming in on the way up as well. The breakouts. As for the close, it has come in slightly weaker than the previous days. So there could be this little bit of a short-term slowing happening across the board. Same thing for Solana here. It did have a down day. So lower low, lower high, but still holding up 333. It's broken past the previous top set at 325. And the old all-time high is within a few dollars here for AUD. Obviously, the US dollar has strengthened. The Aussie dollar has also weakened, but it's starting to get that big push on here. So I think once this breaks out, same sort of thing is going to happen with the US dollar chart. You're going to see pretty big moves after quite a considerable amount of time of consolidation under those highs. It looks like it's winding up. So if Bitcoin is the precursor to the same pattern here, this big wind up before a pump, there is a very high chance that you're going to see a similar sort of thing with Solana because the pattern is essentially the same. So Bitcoin short term has hit $93,500. We've looked at the fear and greed here. To the next upside targets, pretty wild to think that we could be going there, but 100K is the next upside target. Now I've changed the price ranges here. We were using the smaller range because the price action itself has extended. That's when we start to use the next price ranges to give us those targets, right? And so what I'm using is the first range out of the low, a pretty important range itself, because this price range is kind of like a heartbeat to the market. You will probably see similar repeats throughout this cycle. And we did some analysis back in earlier videos looking at the first range out on BTC and how this was exactly 6 times that first range out to get to that all-time high. And there are some pretty good similarities with this first range out projected off the low that gave us that exact $74,000 top as well. It's basically 3 times that range projected off the low. So that's why we're watching this on a shorter term time frame. If we get to that 3 times the range, well, that's about $100,500. So $100,500, a good psychological level. Longer term, Bitcoin is starting to explode. This is part of the analysis looking at those consolidations and then what happens next. Remember those big red arrows I had here, looking at the higher swing lows forming and then where the market wants to go next. It's happened each time in the past. On top of this, the November election period, you can see how much the market bursts from this point. That was 2020 and then 2016. You had about 12 months left till the end. So there's 395 days. And then from that November period to the end, that was your 12 months as well, right to that top there in November of 2021. Could we see something similar? I guess so. But along the way, I do believe the market is going to do enough to fool most of the people most of the time, because it can't be that simple. It can't be just like, wait 12 months and you're going to get to the top and you can all sell out at the same time. You know, things just don't work like that. Like last time, it ran up really hard, really fast, then had a big pullback, and a lot of people thought it was over there. It was a pretty dead climb, but you still had a lot of opportunities in altcoins. So this time, although it's going to rhyme, it's not going to be exactly the same as any of the previous cycles. So far, it's mirroring something like 2017. So we'll have to wait and see whether this thing does pick up some speed towards the end of the cycle, which was quite different to what happened in 2021. Let's take the USDT, look at the USDT dominance, as this was a big one from yesterday, looking at if this was going to break down and basically send everything right up. At the moment, you can see it's trying to hold this as support yet again, like it's done throughout its entire history with each of Bitcoin's tops. You have intermediate tops, you have all-time high tops, but this goes back to 2017. So the 2017 all-time high connected to these lows. Could this be the time that it finally breaks and things go nuts? I tend to think so, but we might have to wait just those maybe few days or few weeks. If it starts to break past 50% and then get close to these tops again at around 6%, so the 50% level's at 4.75, and then you've got 6% where these tops are, well, we'd have to reassess, because that could be a little bit different for the cycle. This time is different, right? Now, we can't talk about the total cryptocurrency market cap and all of our favorite altcoins without mentioning our channel sponsors, Bybit, Bluffin, and SwiftX. Check the links out in the video description. Plenty of cashback offers, $20 free Bitcoin with SwiftX. That's the shill part. But more importantly, what happens every single cycle is that people are looking for their favorite altcoin. It's not on one exchange, it's on another exchange or another exchange, and they don't have them set up. And then they wait a day or two to get them set up. The crypto pumps and they think, I missed out on that, and they look for the next one. So what I've talked about for months is setting yourself up on multiple exchanges so that you're ready for any of these moves. If you're looking for any of these different altcoins, to get into those. I know it's a hassle, I know it's a bit of a bitch, and yes, I do talk about them here on the channel, but I'm just letting you know how I set up, how I talk to our members, what I suggest to them. And basically that's the strategy that everyone uses if you need to get into multiple different altcoins. Otherwise, sit in one exchange and take an easy ride throughout this bull market. Entirely up to you, but that's essentially what you got to do if you want to get into multiple different ones. Back to the total cryptocurrency market cap. The total cryptocurrency market cap, extreme volume here, all-time high volume. Now, something interesting to note is that we had all-time high volume back in January of 2021. So let's call it 3 months from the top when that April, May top came in. That was the highest volume. What came next was the absolute peak. So that one there basically just paused the market for 1, 2, 3 weeks and then got going on the 4th week. So let's keep that in mind as well. That's why I'm sort of building this video to show at least what the probabilities have said is that a pause could be likely. I'm not talking any sort of game over all-time high top, but there are signs to show that, well, things are getting slightly overbought, but it doesn't mean there needs to be a massive correction either. And like I said earlier, that is what people wait for, and it doesn't happen, and they wait, and then all of a sudden they're late again onto the train and they're buying towards the peaks. So when this final peak came in, then you had all-time high volume. Again, it beat that one, but you had a major reversal bar taking out the lows, and then the next week followed, taking out the swing bottoms. So that was a big one there. The rally that came next, low volume, and we all know the bear market came after that. So fast forwarding to where we are today, we had extreme volume come in on the peak in March. So that was the highest volume we'd seen this entire cycle. That led to the peak. And then August, which was even bigger volume than that, led to the low. So a really good bottom signal as well. And then we've basically been climbing on steady volume here, which now doesn't seem so steady anymore. We've got this extreme high volume. So a couple of scenarios. This could be the highest volume here and we wait a couple more weeks to get a pause in, or we pause from this point. There's still 4 days to go in the week. A little bit early to say, but what is confirmed is that it is the highest volume that we've seen in history for the total cryptocurrency market cap. Total 3. So the true altcoin market cap has also found some resistance here at 640 billion. This is the level that we're watching for a break above to get into that next tipping point. So I think it's only natural that you would see at least a pause here before it gets going again. And in terms of the days in relation to the previous cycle, we're basically on track now. It was within a couple of weeks before we get that next sort of move on that basically brings on all of that mayhem and the degeneracy where people are just sort of chucking money in left, right, and center at anything to get any sort of profits that they possibly can. On top of that, you've got the ETH BTC chart, which is getting close to that timing as well. It's basically a week and a half off 184 weeks from that the first top in May, which is the same as the previous, well, the cycle before last in 2017. So you had the peak against Bitcoin value in June. Give it 184 weeks. The higher low came in here. And then ETH went nuts. Altcoins went nuts. And I guess you could call that the true altcoin season. So if the timing is similar to the last cycle, I'd say that we're probably somewhere within the vicinity of a couple of weeks to a month or so of this thing going nuts. Within that period, from what we could see with the other indicators and signals here, is that it's either going to be a pause, and when Bitcoin pauses, what we do see in the past is that altcoins can go nuts. If Bitcoin corrects heavily, it's probably unlikely that altcoins are going to go nuts. So I guess putting this together from today and yesterday, it seems like we should be coming ripe for a pause and then altcoins to go a little nuts. Big picture, everything that we looked at earlier is still pointing in the upwards trajectory. So that quarter 1 is looking good. Quarter 4, this quarter looking up. Then we could expect some sort of correction in quarter 1 of 2025, then continue up. And of course, the rest of it's history. We don't need to talk about that now because that's a long way off. Just in this short term, I think is where things could go a little bit unsteady for those who are sort of waiting for this opportunity that might never come. Subscribe. Like the content. I'll see you guys back at the next video. Thanks for hanging out with me. Till then, take care and peace out.